Rating agencies are the teachers who look sternly over their spectacles and purse their lips about fiscal misbehaviour, which is what S&P Global Ratings did today in a press release that contained this graph of total Australian government spending, which is at a post-war record high, higher than the previous post-war record high in the pandemic. And this graph of the deteriorating fiscal balance. At the same time as the federal budget tips back into deficit, says S&P, lax fiscal discipline at the state level has seen big spending state governments remain in large deficits. And if election commitments aren't funded by taxes or savings, then deficits could widen further, which is a statement of the bleeding obvious, of course, and today the Labor Party said they would be. S&P is also very displeased with the proliferation of off-budget spending, which is obfuscating Australia's fiscal position. The share market sailed on unconcerned, up 0.4%, mainly because most of the banks, except CBA, went up. And that followed a rise on Wall Street on Friday, even though no one could figure out whether America and China were holding trade talks, because President Trump said they were and President Xi Jinping said they weren't. So it was he said, she said. But this is what markets are really worried about: rising inflation in America from tariffs and slowing economic growth, also from tariffs, which means stagflation. And that is toxic for markets. On commodity markets, gold went up, but non-precious metals went down. And the Aussie dollar stayed at 64 US cents. And that's finance.